Gold and silver got absolutely murdered today. Gold down over 5% and silver down almost 15% just today. So what is going on? Is the rally over? Will the bloodbath continue? Is this an opportunity to buy the dip? Let's dive in. A couple weeks ago, I made a video about the rally that's been going on in gold and silver and saying, hey, I was expecting some sort of a pullback after silver got through $25 to $26 per ounce and after gold got above $1,900 per ounce. Usually when you break through some pretty strong earlier resistance points, you're going to have that sell-off happen afterwards to come back down and retest what was prior resistance to see if it'll hold as new support and kind of build a new floor there. Well, it looks like that is what is happening now, and it just took a little bit longer for this to happen than I thought it would originally happen in, but it looks like it's happening now. Now, as of right now, the price of silver per ounce is just under $25 per ounce, and the price of gold is at about $19.20. So we had a little bit of a steeper sell-off in silver than I thought we would. We're currently under what I thought would be support and resistance, 26 at the high point, 25 at the low point. So we're a little bit beneath that. And then with gold, we're still holding strong above that prior resistance. And it looks like we're building support right above this $1,900 mark. Now, a couple things to note. We're going to look at gold first. One of the reasons why gold isn't having as an extreme of a sell-off as silver is because of the short position of the bullion banks. This is why I'm still so strongly bullish fundamentally on gold, even when things like this happen, is because every time the new commitment of traders report comes out, it shows that net shorts are still at extremes. And so the bullion banks are taking every single opportunity they have, like sell-offs like we're having today, to close out some of their shorts at less painful prices. And they even try and cause sell-offs like this to happen by loading up on a little bit more of their short positions in order to close those out. It's kind of like a double down strategy. You double down on your shorts when it goes up high, and enough selling pressure once it gets up there, once some profit taking starts to happen, will force that price back down, and then you can buy to close your shorts. And so this is something that's been happening over and over and over again since the price of gold broke through that 5-6 year long resistance point at around $1,300 per ounce. So ever since it broke through there, the banks have been doing the same exact thing over and over again. As soon as there's a rally, load up on shorts, push the price down, close out your shorts. And they've been since then trying to unload this position, but they keep on getting behind because every time it fails, because every time that happens, they build a new base of support, which ultimately then propels the price of gold even higher. So even though their total position in terms of contracts might be decreasing from time to time, the actual dollar amount that they're losing continues to escalate because the price of gold continues to rise. And so the contracts going down isn't offsetting what they're losing in terms of dollars on that short side as it goes up. And so ultimately, in a situation like this, especially where we land at good support here on gold, this is something that I'm looking at as a fantastic opportunity, especially since we're building this nice base here. Ultimately, yes, there could be a steeper sell-off here, and I'm not going to say that that can't happen or that it won't happen. But if it does, quite honestly, I'm looking at that as a fantastic opportunity because the fundamentals have never been stronger for gold. Now, silver, on the other hand, as I've always said, there's always a higher risk to reward ratio with silver than something like gold. It is much more volatile, as evidenced today, triple the sell-off in terms of percentage that you saw in gold. We're down about 15% in just one day. Part of the reason for that is there isn't the same net short position with silver as there is with gold. So there's a lot more room, a lot more capacity with traders to load up on shorts to push that price down faster and harder. And so you're going to see things like that happen because you don't have the same, the overall net market position in silver is much more neutral. And so you do have the capacity in the market for these swings to be much more volatile. Now, we could continue this sell-off. Ultimately, just like with gold, I think the fundamentals with silver are very strong, except for the fact that we're not seeing a massive short squeeze in silver like we are in gold right now. Now, the fundamentals are strong in silver because we are facing massive liquidity shortages with all of the money that's going into SLV, particularly. It's an ETF that tracks silver. There's a lot of requests for delivery of silver right now that look like it's hard to be met due to the current climate and the current environment with how much physical silver there is. There isn't the same net short position market-wide as we see in gold, but there is a squeeze on physical supply. And so the fundamentals are still really good for silver. Now, again, with both gold and silver here, I'm not saying that we won't see any more bleeding here. We could absolutely see more of a sell-off in both of these. To me, that looks like a fantastic opportunity. I'm not scared at all. I'm not freaking out by this at all. And part of the reason for that is, quite honestly, lucky timing here because of my video that I dropped yesterday on tail hedging. If you haven't watched that video, go back and watch that video right now. It's the video right before this one on tail hedging, but it's a strategy that I use all the time to buy really cheap insurance, if you will, on big drops. And so that gives you dry powder in times like today to load up more on longs if you want to, or just take some profits off the table, and it smooths out your overall performance because when massive drops happen, then your shorts make up for the losses in your longs. Now, gold and silver miners, I don't talk a lot about on this channel, but I still, especially after today, we had a big sell-off, but in this current environment with how big their rally has been over the past couple of weeks, couple of months, I still think that gold and silver miners are some of the best buys of the decade. They're some of the most undervalued stocks there are. Do not conflate miners with actual precious metals. They're different things. Precious metals, gold and silver, consider them money. Treat them as money. They're not an investment. They don't produce income or cash flow. Precious metals themselves are money. Miners are equities. They're stocks, and you have to treat them as such. And so when you're doing research, when you're buying them, when you're investing in them, they're different things. Do not conflate the two and do not substitute them for each other because they're entirely different. Now, some of the fundamental drivers that are bullish for both, but that doesn't mean that they're the same things, and it doesn't mean they're going to perform anywhere near the same. And so when you're looking at miners, make sure you're doing due diligence as you would when you're buying a stock. And if you don't know how to do fundamental analysis yourself, pick an active mutual fund by somebody that you trust who does that research for you, specifically for the mining stocks. Because there are so many garbage miners out there. Picking something like a passive fund is going to include a lot of junk that, quite honestly, you might prefer to not have any exposure to because they're garbage companies. With that being said, though, I still think the fundamentals that are driving miners are some of the best we've ever seen, and they're some of the most undervalued stocks right now in the market. Speaking of the stock market, we had a little bit of a sell-off in the stock market today as well, and we reached pretty much close to what I will consider a win on my price target there. On the S&P 500, we hit 33.80. And so my price target by the end of August was 3,400. I was using that number kind of as the all-time high number. I'll throw a chart up here on the screen so you can see. We almost hit 3,400 before the sell-off. I'm looking in, this is January, February here that you're seeing on the chart. So we almost hit that $3,400 mark. We never actually quite did. And if you look at this 33.80 number, that was really the top. So we did get above that, but you can see that was kind of the resistance line that we had a false breakout for. So today we touched 33.80, as you can see here on this minute chart for what happened today. And, there was a little bit of sell-off. We came back a little bit, didn't make it as high, and then boom, as soon as we broke that trend line, there was a steep sell-off. And so I'm looking at this and I'm saying, hey, we hit the high for the short term. So the highs are in for the next couple of weeks at least in terms of what my outlook is. And so I expect some selling, I expect some consolidation, some volatility here. We're seeing a little bit of a tick up in the VIX. The volatility index spiked just a tad bit today. So I expect to see more of this. I'm not looking at any giant sell-off here. I think the players in the market, all the money coming in, the liquidity, everything that's happening right now from a macro perspective, from our policymakers, fiscal policy and monetary policy, I don't think that they're going to just stand by and watch a giant sell-off happen. So I'm not looking at something like that, but I do think we move a little bit volatile and sideways for at least the next couple of weeks before we finally break out of that all-time high and start a big FOMO rally, melt up, crack up boom. Now, in other news, I want to thank everybody who has signed up for my newsletter, and I also would like to apologize because for some reason, I guess I'm the only one. I'm talking to tech support right now for the software service that I'm using for the newsletter, and it's not sending out emails. I'm able to collect everybody who's signed up. I'm seeing your emails come through, but I'm not able to send anything out yet. And so I'm going back and forth with tech support, and they said I'm the only one who's ever experienced this bug for some reason. So I apologize. I probably won't get my first issue out this week, but I'm working on it to get it set up and established so that I can start pushing out those newsletters. As soon as the issue is fixed, I will repost the link to allow more and more people. If you haven't yet subscribed, don't worry, I'll get that link updated soon so that you can go in and subscribe. It'll be a weekly newsletter that just comes out in an email once per week that shows just a few of my favorite articles that I've read for that week, something that has given me value, I've found value in. So just a couple of the best ones of the week. So if you're interested in that, I'll be posting a new link so you can subscribe soon. That's all for today. Stay vigilant, stay focused. Times like these are kind of exciting when you start to see a little bit more volatility in the markets. Gives you some action, gives you some things to start trading on. So I'll keep you focused as new information comes out. Really appreciate you guys. Thanks for watching. If you liked the video, hit that like button and the subscribe button. It really does help out the YouTube algorithm. So you guys are the best. Have a good day.